Ladies and gentlemen, good day and welcome to India Pesticides Limited Q4 FY24 results conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitesh Doot from Dolat Capital. Thank you and over to you, sir.
Thank you, Yusuf. Good afternoon, everyone. On behalf of Dolat Capital, I would like to thank the management of India Pesticides Limited for giving us the opportunity to host their Q4 and FY24 earnings conference call. From the management team, we have with us today Mr. Anand Swarup Agarwal, Director, Mr. D.K. Jain, Chief Executive Officer, and Mr. S.P. Gupta, Chief Financial Officer. Without further ado, I would like to hand over the call to the management for their opening remarks, post which we'll open the forum for a Q&A session. Thank you and over to you, sir.
Thank you, Mr. Nitesh. Ladies and gentlemen, good afternoon and welcome to you our quarterly conference call. I am pleased to update you on our company's progress and the state of agrochemical sector. This year has presented significant challenges including volatile raw material prices and global economic uncertainties as a result of global conflicts. Despite these obstacles, we have seen recovery. Our strategic initiatives have positioned us well. We have researched numerous chemical components internationally, expanded our market presence, and signed contracts with esteemed Japanese customers. We also initiated production in one of our subsidiaries, enhancing our capacity and market reach. Additionally, our Formulations segment is also gaining traction and brand value. The China Plus One policy has been advantageous, helping us diversify our supply chain and reduce dependency on China. Despite global macroeconomic challenges, we have remained profitable. Looking ahead, we are optimistic about our continued recovery and growth. Our current quarter has a robust order book position. Thank you for ongoing support. We are confident in our vision and the strategy to achieve sustainable growth and success. Thank you. Thank you very much. I hand over this to Mr. D.K. Jain.
Thank you, sir. Good afternoon, ladies and gentlemen. Thank you for sparing your valuable time to attend this call. Friends, as you all know, the Indian agrochemical industry had witnessed major headwinds in FY24. Several key factors contributed to this setback. The export market, which traditionally commands over 50% of industry's revenue, faced sluggish growth because of global destocking trend, with companies reducing the inventory levels. Number two, influx of competitively priced products from China further exacerbated the situation, putting pressure on domestic prices and profitability. The crucial Rabi sowing season was negatively impacted by lower reservoir levels in India, leading to reduced demand for agrochemicals. Geopolitical situations and weather disturbances across many countries have also added to these worries. Despite these headwinds, the Indian agrochemical industry is poised for a robust growth, rebound with a projected compound annual growth rate of about 9% from FY25 to FY28. This is a conservative estimate based on NITI Aayog's projections of exceeding 9% growth. This resurgence will be fueled by three factors. Number one, sustained government support. Number two, advancement in technology. And number three, the expansion of the export market. All of which will propel the industry size to reach $14.5 billion by the close of FY28. We are confident to navigate current industry challenges on the back of our robust pipeline of new innovative products coupled with an increased market presence. Our relentless pursuit of innovation and our cutting-edge technology has allowed us to develop high-quality products and maintain our competitive edge in the market. This has not only helped us in adapting to changing market conditions, but also in anticipating and meeting the evolving needs of our customers. Now I just give you about some strategic development during this year. We are excited to announce the commissioning of our commercial production from first block of our 100% subsidiary, Shalvi Specialties, which will further fuel our future growth. We entered in a 3-year contract with a prominent Japanese company to supply an intermediate. This collaboration reflects our commitment to cultivating strong partnerships and enhancing our global footprint. We incorporated a new subsidiary, Amona Specialties, which will operate under an asset-light business model. During this period, 3 of our advanced herbicide technical products have been granted technical equivalence certification by the European Union. Apart from this, we have also received registrations in UK, Canada and US also. During the year, we have made some strategic changes in our leadership team. Their fresh perspectives and energy will complement the experience and vision of our team, ensuring a seamless transition and a bright future for India Pesticides. Furthermore, we have increased our present installed capacity of technical and intermediates to 24,200 metric tons. This capacity increase will enable us to better serve our customers and capitalize on the growing demand of our products. In addition to this capacity expansion, we have taken a significant step towards facilitating our expansion efforts by acquiring a land adjacent to our Sandila plant. This strategic move not only provides us with the room for further growth, but also enhances our operational efficiency. Capex of 50 crores for IPL and 60 crores for Shalvi Specialty is planned for FY25, which will further strengthen the company's capacities and capabilities for the coming years. As we grow, our commitment towards bringing chemicals which can substitute and limit our dependence on imports remains steadfast. This is also one of the many initiatives that aligns to company's vision of Make in India and Vocal for Local to support domestic growth. We deeply appreciate and trust and unwavering support we have received from our valued customers, dedicated employees, trusted partners and committed shareholders as we embark on our journey towards a more sustainable future. We remain determined in our commitment to deliver value to each one of them. As we move forward, our primary focus remains on attaining market leadership in the agro-solution sector in India. We are fully dedicated to achieving this goal by evolving responsibly with our strategic priorities. With this, I would like to pass on to Mr. S.P. Gupta to walk us through our FY24 financial highlights. Mr. S.P. Gupta.
Thank you, sir. Good afternoon, ladies and gentlemen, and thank you for joining the India Pesticide conference call to discuss Q4 and FY24 results. Taking you through the financial highlights for the quarter and for the year. Revenue for FY24 stood at 696 crore as compared to 898 crore achieved in FY23, a decline of 23%. On quarterly performance, total revenue for Q4 FY24 was 127 crore as compared to 200 crore achieved in Q4 FY23, showing a decline of 37%. On geographical split, domestic market contributed rupees 88 crore and international market rupees 38 crore to the revenue. For FY24, export turnover has declined to rupees 270 crore from rupees 482 crore achieved in FY23, decline of 44%. Export continue to remain impacted due to high channel inventory and destocking continues across the world. However, during current quarter, we are seeing signs of reversal. We registered full year EBITDA of 102 crore with 15% EBITDA margin as compared to 24% EBITDA margin achieved in FY23. PAT margin for FY24 stood at 9%. Margin were impacted by sluggish global demand and lower product price realization. Rupees 110 crore of capex has been planned for FY25 for both India Pesticides Limited and 100% subsidiary Pesticides Limited. India Pesticides Limited has a strong balance sheet with the ability to generate good free cash flow. Company is planning to fuel its capex plan with internal accruals. Our cash and cash equivalent at the end of the Q4 was 132 crore. We remain confident of continuing our growth trajectory while extending full support to our customers, supplier and other valued stakeholders. With this, we would be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Ayush Rathi, an individual investor. Please go ahead.
Hello, am I audible?
Your voice is very low, Mr. Rathi.
Is it better now?
Yes, please go ahead.
Yeah. Thanks for taking my question. First question on the volume and on the value side. How much of the top line decline is on the volume front versus on the realization front, both on annual and quarter level?
For quarterly volume has declined 34% and price has declined 4%. Total decline is 38%.
All right. And annual level?
Annual basis, volume has 10% decline. Capacity utilization has declined by around 12%. So absolute number right now we do not have.
All right. All right. So the next question is on the pricing side. What we have been hearing generally is that the pricing pressure is reducing, and at the moment, a lot of companies have also mentioned that we are seeing the pricing being stabilized. So I just wanted your insights on how is the situation on ground in terms of realization front.
Now, the pricing front, the price had stopped declining, but they are rising very slow. And the raw material cost they have also become stable. But the margin they are slightly on reduced level right now as compared to earlier.
All right. So probably 1 to 2 quarters it would take for the pricing to also increase at a rapid pace. Is that assumption fair?
Yes, yes.
All right. Thanks. Also, sir, if I'm correct, since our base has been lower for this fiscal, which is FY24, and we were expecting a 15 to 20% growth on the top line in fiscal 25 as well as fiscal 26. I'm just keen to understand where is the growth coming from? Is it from new products or volumes kicking in or probably better realizations? If you could give me some insights on that.
It will be a blended of our contribution from new products, since we have invested more than 150 crore and our new product have started contributing. Even we are finding that for our earlier old product, there has been better demand during this current quarter. We have received good export order. So I think it will be a combination of good export turnover this year and as well as contribution from new products. They will help us to achieve the revenue growth that we have projected.
Okay, which is 15 to 20%, right?
Yes.
Yes. And so on the volume recovery front, also volume would also, we'll have a volume recovery in this fiscal, the coming fiscal, FY25?
Yeah. It will be. Volume recovery will be there. I could not understand your question properly.
I mean, so usually what we have been seeing, the customers are deferring orders, and so we'll be getting more volume, like the volume recovery would be there, right? Rather than the more contribution would come from volume recovery than the price realization side.
Yes. More recovery will be from volume driven than price recovery.
Okay. So another question is on the exports. So if you could share broadly in terms of percentage, which all geographical areas contribute how much of our top line for FY24? And majorly, if you can just give me a number, give me some insights on which international, which economy has majorly been an issue for us on the exports side. I do understand we export to 25 plus countries, but if you could just give me a gist of it, which economy is a pain for us as of now?
For the quarter, the export has declined from 109 crore in last year to 38 crore, which is a decline of 65%. Our major export geographies are Europe and Australia, which were hit by the adverse weather and high channel inventory last year. But we are seeing some signs of reversal during current quarter.
All right. And just last question from my side. Do we maintain our guidance on the EBITDA margin of 20 to 22% on account of newer products also coming on stream? This is something which you had guided earlier in this fiscal, 20 to 22% EBITDA margin.
Right now, EBITDA margin guidance will be difficult. It will take another 1 or 2 more quarters to give us concrete EBITDA margin guidance.
Okay, but it will definitely improve from this annual fiscal, right?
From Q4 it will definitely improve. Q4 it was a one-off quarter, we must say.
Sure, sir. Thank you a lot. That's all from my side.
Thank you.
Thank you.
Yes, sir. Thanks.
Participants, to ask a question, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next question is from the line of Karan Shah from GC Holdings. Please go ahead.
Thank you for the opportunity, sir. So just wanted to understand what was the major reason behind such a steep drop in the EBITDA margin, because if you see even at the gross level, the decline at EBITDA level is way steeper compared to the gross. So is there any one-off, like you said, in other expense, and how do we see it for the coming year?
Currently, during the quarter, our other expenses were high, as you can see from our results. What has happened, we have converted 2 of our raw materials on job work basis, which the company earlier was buying. We have paid job work charges of 6 crore, which have resulted in higher other expenses and reduction in cost of material. Secondly, freight charges has increased significantly due to this Red Sea problem, and it has increased our freight charges by around 2 crore. So the gross margin is looking better, but if you adjust for these 2 figures, then gross margin will also come down by say 5 to 6%.
Okay. And sir, so do we expect this job work to continue in the coming subsequent quarters, or it was just for this 4th quarter only?
It will continue from the 2nd quarter onwards. Since the product what we are getting this job work done is basically used in quarter 2 to quarter 3 and Q4. So this quarter job work charges may be on very lower side.
Okay. Sir, on registration front, are we how many new products do we plan to introduce in this particular year? And would it be for the domestic market or export market?
We have received registrations last year from CIB for 3 of our products, and we have also registered our herbicides in Europe. 3 of our herbicides got registration in Europe, what is they call technical equivalence. And apart from that, we have got registration of these products in UK, US, and 1 product in Canada also. And this year we are planning to register again 3 more products in Australian market and European market. And we are already our registration request for the local with CIB is for more than 12 products. They are already in the pipeline with the CIB authorities.
Okay. So the 15 to 20% guidance that we are talking about for FY25 would majorly be driven by these new products, which I'm assuming can be higher margin compared to the existing basket?
Sir, new products will certainly contribute to our growth, and margins, as Mr. Gupta has already told, it is slightly difficult to tell at present. Maybe after 1 or 2 quarters we would be in a better position to give clear guidance on that.
Okay, but these new products that we are talking about would generally be higher margin products compared to the current basket of products that we have. Is that the right understanding?
See, that's true. While making the decision, while making the calculation, we feel so, but what happens, the scenario changes very fast nowadays. So that is why we are not able to exactly commit to you what margins we would have.
Okay, sir. That is helpful. Thank you.
Thank you. Before we move to the next question, a reminder to the participants: to ask a question, you may press star and 1. Next question is from the line of Ankit Gupta from Bamboo Capital. Please proceed.
Yeah, thanks for the opportunity. So just wanted to know, some of our key products like Sulfo, Captan and Folpet. So how has been the pricing for these products? How much have the prices fallen in Q4 and FY24?
Sir, prices for all these products, they have fallen a bit, maybe around 10%, 10 to 12%.
Okay, so the decline that we have seen in Q4 and the full financial year is primarily because, there has been an inventory destocking which is going on in our key market, because these products are less competitive and we are one of the very few suppliers in the world for these products, right?
So see, the destocking is there, and now we feel that the destocking should slowly get completed, and we feel there should be increase in the demand for these products. And as Mr. Gupta has already told you that for this quarter we are seeing very good order position.
So for Captan, Folpet and Sulfo, how much has been the volume decline in Q4? Because I think you told that 34% is the overall decline in the volumes for this quarter. So for this product, is it more or less?
Q4, absolutely there was no sale of Sulfo, and Captan, Folpet were reasonably at the old level only.
Sure.
Volume decline in these products were much more than new products.
Yes.
Okay. And sir, we had introduced quite a few of new products in last year and in FY23 also. So haven't the sale of those products increased, because we would have started from zero or negligible quantity for these products? And is it that the demand scenario in the global market is so bad that even for new products the demand is very volatile or very less?
So that is true. That is there for all the products, sir. What is happening? The overall agrochemical industry across the world is facing the same problem. Old products or new product, everything is having resistance for the volumes. And probably it may take another 1 or 2 quarters before it gets stabilization.
But globally, the global giants of the agrochemical industries are saying that they are expecting recovery in the second half of next financial year, H2 of FY25, and some companies have even started commenting that FY25 will also be a challenging year for the agrochemical industry. So how do you feel the demand is panning out for the industry, and what are your views on the demand revival?
So demand revival would be there, sir. As we said, at least 2 quarters it will be slightly difficult. But some of our products, they are getting, because last year the volume reduction was very severe. So probably this year we are getting better demand. But overall situation in the agrochemical industry would be more or less similar as what it was there in the last quarter. But coming 2 quarters, it will be, we feel that it should get improved.
Okay. It should improve from Q4, but it will remain still be a challenging first half.
For us, it will certainly improve from the Q4, certainly. Yes.
Yeah, so it will improve, but it will still be challenging. Like, let's say, will not go back.
Yeah, so it is there, yeah. So that's...
Yeah, okay. Thank you, Mr.
Thank you.
Thank you. Participant, to ask a question, you may press star and 1. Next question is from the line of Giriraj Daga from Visaria Family Trust. Please proceed.
Yeah. Hello, team. So my first question is, like, I'll take it to the quarter 3 call where we mentioned that in quarter 4 we expect volume to be better compared to quarter 3. Although year-on-year growth may not be possible, but when you look at numbers, it's like down again 15-18% from quarter 4 level also. So what went wrong there? So we had a call in the mid of Feb, right?
Actually, during this March month, February mid and March month, we did not receive any order of our one of the old legacy products from export market. So the export market has declined sharper than what we were expecting.
Okay. And so again, we are guiding 15-20% growth, but that way we may not be able to even reach FY23 number also. And our earlier expectation was somewhere about, let's say, for FY25 going up to 1200 crore also. So, like, when we look at the volume number, I'm not looking at the prices side. Do you think we would be able to cross FY23 volume in FY25?
FY23 volume we may not cross, but we will reach near to FY23 volume.
Okay. And prices you mentioned are down 20% or 12-15% compared to full year basis.
Yeah.
Yes. Okay. Second, on the capex, also we mentioned about doing 50 crore capex in quarter 4 and taking about 110 crore capex for the full year. But when I look at cash flow, we did about 77 crore of capex. So what is the capex guidance for FY25?
For FY25, we are projecting 110 crore of capex. It is 50 crore in India Pesticides and 60 crore in our 100% subsidiary.
Okay. And largely funded through the internal accruals.
Well, it will be. We will not be taking any term loan sort of thing.
Okay. Sure. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Zubraj Singha, an individual investor. Please proceed.
Hello. Thanks for the opportunity. So, just wanted to understand one thing. So, a couple of quarters back, there was some talk about the collaboration with the Japanese org, right? So, just wanted to understand a little bit more on it. Like, is it still, how is it? I mean, is it proceeding or what is the current?
No, sir, we were having a connection with the Japanese company. They visited us, and finally we have entered into a 3-year agreement for supply of one of the intermediates they require. So that agreement is already in place, and we have also started supplying them. And they have also visited our new site under our subsidiary Salvage, and we are hopeful that we will be having some more products from them.
Okay. Thanks. This is it.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1. Next question is from the line of Ketan Atawali from Robo Capital. Please proceed.
Hello, sir. Thank you for the opportunity. Sir, I wanted to know what do you expect on revenue front in FY26? Can we reach FY23 number then?
FY26, we will definitely cross FY23 numbers. Since we are expecting 15 to 20% growth compounded in next 2 years.
Okay. Thank you.
Thank you. Next question is from the line of Ajay Desai, an individual investor. Please proceed.
Yeah, good afternoon. Just wanted to check on this recent coming budget post election results are out. Do we expect any major policy change announcement for our industry?
Sir, policy change around industry may be difficult. What we feel probably the PLI scheme is pending for quite some time with the government. If they include PLI scheme for the agrochemical industry, probably that will certainly help the industry. So that is one part. Other requirement, we have been requesting the government to increase the custom duty on technicals so that people can make in India. So probably there could be something that would be good for the industry.
So either way, the benefit, it is expected to benefit the industry.
Benefit, yes, certainly.
Sure. Thanks.
Thank you. Next question is from the line of Sanika from Sapphire Capital. Please proceed.
Hi, sir. Actually, I wanted to ask, like we said that we are going to see...
Miss Sanika, your voice is very low.
Can you hear me now?
Still the same?
Is it better?
Okay, it's slightly better. Please proceed.
Yeah, so,
Miss Sanika, it's not audible.
No, not audible.
Is it better now?
Yes.
Yeah, so in quarter one, growth in our revenue, right? Which means we're going to have a very strong H2 to meet our guidance of 15% top line growth. So am I right when I assume that?
Madam, we are not able to understand the question. Please, could you repeat?
So when you say that we're going to achieve 15 to 20% top line growth,
yes,
FY25, and quarter one and quarter two is going to be marginally better than quarter four, which means that our H2 is going to be way stronger than H1. Am I right when I assume that?
We expect the 20% growth over the last year, and quarter one would be certainly better than quarter four what we have, because we are seeing good order position in this quarter. So it will be certainly better, and we feel it will be at least 20% more than the last quarter.
So quarter one is going to be 20% more than the last quarter.
It will be certainly better than Q1 of last year also.
Yeah.
Okay. Okay, and can you tell me what kind of order book are we looking at?
Order?
Order book? What is our order book level?
Order book level?
What is our order book right now?
More than 100 crores? It is more than 100 crores export order.
Okay. Okay, thank you.
Thank you. Participants, to ask a question, you may press star and 1. We have our next follow-up question from the line of Mr. Giriraj Daga from Visaria Family Trust. Please proceed.
Yes, just one data point what you mentioned. Quarter one will be better than last year quarter one, but that will mean substantial 50% jump compared to quarter four level. So that is possible, right?
Yes, 50% from say 125 crore, yes, it is possible.
So 200 crore is that, like 201 crore that you did last quarter one as
it should be around this level and better, maybe better than this. Doesn't work.
Okay. And like margin, obviously this quarter is very low. So I'm not taking this quarter number. But for the full year, we are at 13%. So do you think we can, so the next year, achieve similar kind of a number, or will not be able to guide that also?
Yes, yes. We are expecting slightly better number, but right now we cannot guide based on this current situation.
Okay, okay, sure. Thank you.
Thank you. Next follow-up question is from the line of Karan Shah from GC Holdings. Please go ahead.
Just one small follow-up question. Since we are talking about a QOQ growth in quarter 1 versus quarter 4, so do we believe that our exports will come back to the level of first quarter of last year, or it will be the domestic market that will be driving the majority of the growth?
This quarter, the growth will be done by export fund only.
So we feel it will be higher than the first quarter of FY23 in terms of export.
Yes, yes. We are expecting it should be higher or in that slide more or less same.
And majority of that will be a volume-driven growth rather than pricing-driven.
Yes, yes.
And how is the channel inventory status for these existing products since we are expecting a strong growth in the export book?
We feel the channel inventory has declined, so this demand has come up.
And this will mainly be for the existing key and large products that we have?
Yes.
Or it will be for the new ones?
This demand is for our old, or you may say, legacy products.
Okay, thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for the closing comments.
Thank you everyone for their participation. For any further queries or clarifications, please do get in touch with our investor relation team. Thank you. Have a nice day.
Thank you. Thank you very much.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.